Thank you so much, Charles, for joining us here on the Dwellynn Show. I'm your host, Ola Dantes. I've got the one and only Charles Ayanleke on the show today. His story is fascinating. I'm so excited to have him on the show. Thanks for joining, Charles.
Thank you so much, Ola. I'm glad to be here.
So Charles has a very unique story, and I can't just wait to dig into it. But Charles, before we even get to all of that, can you just tell our Dwell listeners a little bit more about yourself and kind of what you've been up to lately?
Right. So, I'm just your regular guy. Came over here a little over 12 years ago to the United States. Had to try to feel my way around the place, know exactly what I wanted, how I wanted to set myself up here. I was in Ireland before I got here, in Dublin. And, what I learned very quickly is that not only the societies are arranged different or set up different, also investment is set up different. I found out there were quite a number of opportunities here in the United States that were just not available when I was in Europe. So it would shock a lot of Americans how much opportunity they have just in terms of investment alone. Now we can we can dig a bit more into that later on, depending on how much time you have on the podcast. But I had to learn that new reality very quickly when I got here. I've been here 12 years. I'm a physician by trade. Of course, I'm trying to transition off of that so I can have more time with the family. I do a lot more real estate investment right now. It started as on the side, but now it's probably the main thing that I actually do, wake up, live and breathe real estate these days. But basically that's it in a nutshell.
Wow. I mean, there's just a lot of stuff in there, right? That I would love for us to, unpack. First and foremost, you came from Ireland and you could see, some opportunities that perhaps people that live here might not see, just because you have that different perspective, obviously. But also the other thing that is really fascinating is you're a doctor, right? And when most folks hear doctor is, dollar signs, right? Why would this guy want to even do real estate, right? You're already making so much money, So I think before we even go into any of that, why real estate, right? I mean, it's kind of a good segue, I guess. So why real estate? I know you said you want to spend time with your family, but just kind of elaborate a little bit on that.
Yeah, I mean, so real estate is something I think I stumbled on. I think most people that are in real estate investment, if they're being honest, will tell you that they were accidental landlords as well. The usual story, you get your own initial single family residence, and you basically start to think what next. Most people will start figuring out how they want to invest for their future, get a retirement account and stuff like that. And then at that point, you want to, try to explore any alternative strategies that's out there. So I will say that coming here from Ireland, I had just a little exposure to real estate investment when I was over there, but had to sell my primary residence before I came here because I knew I was not going back to Ireland in a hurry. This happened to be at the most dramatic moment in real estate investment history, at least for most of us in my age group. This was 2006 when I moved to Cleveland from Dublin, Ireland. And, I was just one of those guys I wouldn't say that I had any superior knowledge or that I had any prescient kind of a gift or anything. I sold at the right time. That's the way to put it. So I made a chunk of money selling my primary residence at the time, only because I had to come to Cleveland then to do my training. So I saw this large chunk of money off of capital gains, and then I had the pleasant surprise or the pleasant task of where to invest that money. I think I must have come here with about 80,000 euros or something in that vicinity. So I was confused as to how to invest the money. Of course, I didn't want to spend the entire thing consuming. I just want to see if I could invest that into something. So I ended up investing in the stock market, but this was 2006. It's the wrong time ever if you were going to put money in anything. And then not only did I put it in stock market, I had no education at all about stocks. So I put it in penny stocks. Go figure, right? I was in my dreams. Wow. I thought I was going to multiply my 70 grand to 10x it, like Grant Cardone would say. But what happened in actual fact, as you could probably guess, is I lost everything. in the stock market. This was 2006. It was very painful. My wife would not let me hear the last of it. It was like, we just threw that money away. So I had to begin from scratch. So we had to start from zero. That's when I started to read off of the public libraries, stuff from Kiyosaki's Rich Dad Poor Dad, Cash Flow Quadrant, retire young, retire rich, all of that. I blew through all of that in 18 months. You wouldn't even believe the material that I read. So it was real estate from there. And it was not just real estate. It was no longer accidental real estate. It was deliberate real estate investing, educating myself voraciously, and then start to invest in cash flowing assets that would be recession proof. That's basically how I got where I am.
I mean, that is such a fantastic introduction. And there is so much, again, I wish I was taking notes here. But I really like what you said about not really having that prescient look into the future in 2006. But you got that chunk of money. And when you were saying that, I was really, really happy for you. And then you lost it. So first and foremost, what do you say to that person that is saying, I can't even start because I don't even have any money?
Well, I say to them, you should talk to my 2006 self. Because like I said, at that point, that was the total sum of my lifetime savings. Well, you couldn't call it savings, the total sum of my lifetime earnings, which should have been something that would give me a leg up, right? But I lost it all. So I had to start from the beginning again. I know someone might say, well, it's easy for you to save because you're a physician, so you were able to recover. The actual truth that lies behind that is it's about age. So if you're at an age, I always like to say to people, if you can take risks right now at this kind of age because you have a chance to recover. It's different from when you're just about to retire and then you risk everything in the stock market, like it happened to some people in actual fact in 2008. They retired at a time that the stock market took a, 60, 70, 80% beaten. So that was the wrong time to take a risk. So I think that anybody could do it if I could. It's just a matter of following some basic principles that are time tested. And all of those are covered in the various education materials that everyone needs to be going through if they're interested in real estate investment, or else they'll just be shooting in the dark.
Man, that is just so powerful. There's a lot going on. So you kind of went through all the Rich Dad Poor Dad books. I've done the same. Cash flow quadrant. I mean, it really does change your perspective on what you want for yourself and for your future. So you had all that education. Obviously, some people get into that analysis paralysis phase, but it looks like you didn't. So you got the education. You had the fundamentals, and then you bought your first deal. So can you tell us the story about your first deal? How did you find it? How did you fund it?
Absolutely. So, I briefly mentioned about this single family resident that was living that we had to sell in Ireland. When we got here, of course, what did you do? The first thing you do is to buy another family resident here. So we bought a single family resident in Cleveland, which we were living in at the time, again, at the same kind of stage in real estate cycle where everything was just picked. So that was a 3-bed, 2-bath, but we lived in it. So I don't consider that an investment really because we were living in it. And I always say to people, when you buy something to live in, most people don't run the numbers like they want to be rentals, okay? Which I would advise any young person right now starting, not only to analyze their primary residence like it's a rental that should cash flow, but also to consider house hacking, and we can talk about later, because that was a stage that I could have done that. We didn't have any kids, or if we had maybe just one, we could still live out of a 2-bedroom, 1-bath in a house hacking situation. But anyway, we didn't do that. It was another single family rental. But the real first investment property that we would buy when I got to Florida in 2011 was this 2-unit that we bought right on Jacksonville Beach, So again, the cycles work in your favor or against you, but you got to make the difference count where your education comes in. So at that point in 2011, I'd read up. I had all the Kiyosaki philosophy behind me. I'd read about, Dave Ramsey as well, the Financial Peace University. I wasn't really a Dave Ramsey person, but I was getting that side of things just so I get balanced, okay? So I can have the healthy dose of skepticism that I would need in terms of debt, at the same time be not so risk averse that I would not be able to grow. So anyway, that first property was on Jacksonville Beach. We got a 2-unit. The seller was just trying to cash out. It was a guy that was trying to retire. At that point, we got it for a price that I thought was a high side based on where we were in 2006. But in retrospect, it was just a simple steal because you just couldn't get that kind of return anymore in anything in the Jacksonville area. We can talk about markets and where markets are right now later on if you want. But I got that deal of the 2 units for 167,000 over at the beach at the time. You know, cash flowing from day one because the tenants there, I think at the time were paying 900 each. So that's way beyond your 1% rent to value ratio right there. Again, at that time, I didn't know about rent to value ratio because, as you can tell, most of the Kiyosaki books are very good about giving you the overall bird's eye view of real estate investing. But when you come to the brass knuckle tactics of real estate, it's when you start to join up forums like Bigger Podcasts, listen to podcasts like yourself and many others that are available on the pod, that's when you get to learn about some of these small cheat sheets in terms of rule of thumbs. I didn't know that then. All I knew was that I needed to buy a cash flowing property. And once I looked at the rents at the time against what my mortgage payments was going to be, I was comfortable going for it. And it's always performed from the day we got it. It was our first, and we still own it today. And of course, we have several deals after that, but that was the first step.
And that's something you outsacked?
No, we did not outsack that. So I was saying that I was going to advise anyone starting fresh to outsack. That we bought after we bought our primary residence in Jacksonville.
Gotcha. Okay. So can you talk a little bit more about outsacking and why would you, kind of give that advice to somebody just coming up?
Correct. So outsacking, for your listeners who may not know what outsacking means, it just means you're trying to live rent free. So for instance, instead of buying the 3-bed, 2-bath that I bought because I wanted to, just buy something comfortable for the family in a good area and stuff like that, you could buy a 4-unit property, a quadruplex, in maybe not the best area of town, but not in the terrible war zone part of town either. So you could live in one of the units and rent out the 3 other units. Now, it's called outsacking because you may end up living completely free. Okay, because at least the 2 of the 3 other tenants, right, if you run your numbers well, should be able to cover the monthly rent. So you're pocketing the 3rd tenant's rent every month in cash flow, and you are living absolutely rent-free or absolutely mortgage-free. And guess what? The nice part of that is the 4-unit property, the quadruplex, is treated as if you're buying a single 3-bed, 2-bath family resident because the same rules apply for 1 unit as they do for 4 units. It's only when you go beyond 4 units that you start to dwell into the realms of commercial lending and commercial loans. So it's, again, if I would advise anyone, some of my brothers were interested in learning about this, I would tell them the same thing: is get that 30-year fixed loan. That is the holy grail of real estate. Is, by the way, it's one of those things I was trying to introduce earlier on by saying things that we enjoy in the United States that they don't see anywhere else. This is the only country in the world, and I've been everywhere. I've been to Western Europe before I came here, where you get a 30-year fixed rate loan on a property. You lock down the interest rate. The magic of that is we're living in a generation now of record low interest rates. I kid you not. Let's not get it twisted. Even at today's rising interest rate market, our current rates are still historical lows for America as for the rest of the world. So if you can lock down this kind of record low interest rates for a 30-year period on a 4-unit, where you're living in one and renting out the 3 others and cash flowing every month like a bandit, that's almost illegal in most countries. Canada just up north to us, you couldn't get a 30-year fixed loan even if you owned a bank. And that's the truth.
Wow, I really, really love that. Yeah, that's fantastic. So you bought this 2-unit, you got a taste of real estate, you could see that this was cash flowing and you got a good steal. And then that was in 2006, you said?
So that was 2011. That was when I started to buy the investment properties.
Gotcha. Okay, gotcha. Okay, so this was past the recession, right? So, things were a lot better then. That's why I was asking about the chronological, elements. Okay, so now you got the duplex. and then you started going up, right, in terms of larger properties. Can you kind of like tell us the story of how that came about?
Right. So that same year, 2011, I bought another deal. Because after you bought the first deal, there's something called the law of the first deal. You just want to go and get another one and get another one. To just segue into that, after I'd lost that 70 grand when I first came to Ireland, I knew then that the next time I had any kind of amount of money close to that, now I knew what to do. I know better. So by the time there's that 2006 to 2011 period, all I was doing my residency training and then saving money up. And then I ended up saving up about 90 grand, I think, by the time that I was ready to start investing in 2011. So I put about 40 of that into that Jacksonville Beach duplex. I still had about 40 left after closing costs, right, from the previous one. So we immediately looked for another one because we knew that we would just end up blowing that 40, the remaining 40 grand, the same way we blew the 70 grand when we first came here. So we studiously went for another deal, talked to the realtor, got that next deal. It was 2 units as well in this place called Riverside in Jacksonville. It's a historic neighborhood. And this was just a cash flowing property on steroids because it was owned by somebody who inherited it from their mom. They didn't know what real estate was about. They just wanted to get rid of it. They put it on the market for a ridiculous listing price. I think it was 135 grand or something. We actually beat that down and ended up paying 131 grand for it. Today, each unit in that duplex rents for $1,300. That's $2,600. Now, if people talk about 1% rule, 2% rule, that right there is a 2% rule duplex in the heart of Riverside, Avondale, very desirable part of Jacksonville. Today, if you were going to buy that duplex, it would be north of 350 grand. So it's just time and chance, but you have to be prepared in terms of your education and real estate investment, and you have to be able to stick to it for the long haul. I would say to you that I have since refinanced and pulled out all of the cash that we invested in that duplex, and today, and it's still cash flowing more than many properties that we've acquired years and years after that. After leverage. So that was the second property. It was 2 of them in the first year in 2011. And then we just went from there buying 2 or 3 units every year until we got up to where we are today, where we have about, I think 33 units in the Jacksonville area.
Wow, that's like amazing. I mean, just like the, consistent acquiring properties year on year. So somebody might be listening to this and going, well, Charles, you're a doctor, right? You have money. You can do this. What do you say to that person? I try to imagine what our listeners are kind of thinking. Like, well, you're a doctor, you're doing pretty well. Life is good.
Right. So again, it goes to what I said earlier. It's easy to look for the excuse and say, well, they earn more money, that's why they're able to do that. I can tell you right now that I know a lot of my doctor colleagues who don't own a single rental unit. And all they have is put all their money in the stock market, and then they start seeing the blue and the red arrows. There's this joke when you go to the physician's lounge, you see them all open their CNBC pages and they start looking what stock is up and down today. Many times the stocks have lost a lot of money just because some CEO somewhere was found, cheating on his wife or something crazy. Then all of a sudden the company loses billions of dollars and then the stock goes down. But many of these physicians don't have any kind of passive income coming in. So they are completely at the mercy of the stock market, which is basically a glorified casino, is the way that I look at it. But no, you do not need a physician's income to do what I did. As a matter of fact, if you've gone through my blog post on Bigger Pockets that you mentioned about before we started recording, you will see exactly how it's not been plain sailing. There were times that I've had to put stuff on my credit card and try to pay that off quickly so I don't incur credit card interest rates. If I had all the cash just sitting down someplace, there's no reason for me to go into credit cards, right? So you got to learn all of these things. I've done lines of credit, which I'd had to pay over several years. Here's the thing: if you're going to owe high interest debt, the only thing you should be owing it on is a cash flowing asset. You shouldn't owe interest debt trying to acquire a flashy car or going on an expensive vacation or buying the new trendy clothing. I've never done any of that. Okay. I mean, every time I drive my own car, I'm fine with that. I don't own a house on the lake or anything like that, just something modest. But if it comes to real estate investment, I will find money however possible I could to invest in that property as long as it's a cash flowing asset. So you got to understand what is asset and what is liability. Once you identify what an asset is, then you go all in and you try to make that work.
Oh man, that is so powerful. I really love that. So before we even get to the quick run, I'm just so super excited to talk about, your transition from kind of the, small multifamily to bigger assets, right? And I know you have a fantastic story. I read your blog post, which was fantastic. I just really enjoyed reading it. It was very thoughtful. It was very, it was just very, just really interesting to read, right? And obviously we have some similarities as well. So can you kind of talk about why you made that transition into larger assets?
Absolutely. So again, having read through some of the materials to educate myself, I understood at some point that growing big was probably your ticket into complete financial independence. Okay, you could continue to go. Again, this is an analogy I make. You could do arithmetic progression or you could do geometric progression. The real wealth is built in geometric progression. It's why people give the example of the compound interest, right? Or the power of doubling 1 cent every day over just getting a 50% salary increase, that kind of thing. So for real estate investment, the larger you go, the more the multiplier effect of wealth building. Okay, but so at that point, once we started to buy the 2 units to the 4 units, year on year since 2011, we got to a point where we were saying, okay, now for one thing, the loans are capped at 10 properties. Once you get to 10, they start to get very reluctant to lend you more money. So you got to figure out ways to be able to get more loans, because real estate is only so different from other asset classes, especially because you can get leverage. There are not many other asset classes where you can get it 75% or 80% help from a lender to come up with the funds. But once you cap at 10 for the Fannie and Freddie, you got to look at alternative ways of getting lending. So we looked at the commercial space because we didn't really want to do like getting part investors' money and going into the syndication route. I mean, I still get sleepless nights if I think about investing other people's money, especially because I've lost my own money in the stock market before. I know how pleasant that felt. So I didn't want to go syndication route, get 100 million property. I wanted to do something I could still put down the capital myself, between myself and my wife. So we looked at the smaller small to medium-sized multifamily complexes, 12 to 30 unit range. We quickly went and bought a couple of those in Cleveland and one in the Jacksonville area. In about 12 months, we just doubled the size of my portfolio that way. Now there are newer challenges in terms of managing the property managers, in terms of, controlling your expenses and just increasing income. It's a completely different mindset. It's a paradigm shift. It's a different ball game compared to the 2 to 4 units that we're used to. And even as I talk to you, we're still learning in terms of how to perfect that, to keep our expenses low and maximize our income.
So just real quick, just for the Dwell listeners, can you just kind of tell us the unit size of those assets you just briefly mentioned?
Sure, absolutely. So the Cleveland buildings, we have an 18 unit, we have a 16 unit, and in Jacksonville, we have a 12 unit. So those are the things we acquired over the last 18 months that's completely different from our previous favorite real estate strategy.
Okay, so we're definitely dwelling into the quick rounds. As much as I want to keep talking, I mean, there's so many things we didn't even touch on because of time. These are going to be quick questions, quick answer. You ready, sir?
Yeah, ready.
First question. What makes you, Charles, unique? What is that differentiating factor that separates you from the next guy or the next girl?
Well, I mean, I like to see myself as a regular guy as well, but I think that I'm driven and motivated. I don't ever want to stay where I was yesterday. And I know that I always teach my son this as well. I don't aim to be better than Ola. I aim to be better than Charles of yesterday. As long as you could do that, you will be a better man tomorrow than you are today.
Oh man, that is so powerful. I love that so much. That is so powerful. Second question, what was the last book? Obviously, I know you're a reader, and a great writer too, by the way. What was the last book that you read, and what was the one thing that you picked up from that book?
Oh, I'll tell you, I mean, I'm constantly reading material on real estate. And the last one that I read, which I'm going to read again, is coming. It's called Tax-Free Wealth by I'm blanking on his name now. He's one of the rich dad advisors. But that book completely changed my approach totally. You can maybe attach on the show notes to it.
Yeah, I know the book. I just finished it a few weeks ago. Yeah.
Right. Tom Wright is the guy.
Yep.
So all I've been looking at is how to invest for gains and all of that for the last 10 years. Nobody told me that my biggest expense ever in personal life as well as in business was taxes, and that I could actually double my return on investment overnight, simply by getting educated on my taxes. And look at the most powerful aspect of that is you could do it overnight because you can get the right CPA to look back 5 years and get you all the money back that you've been overpaying. If people will look at their taxes and where they are paying too much taxes, they will probably become a millionaire overnight if they're not worth $1 million yet. That's just how eye-opening that book Tax-Free Wealth was for me.
I mean, there was two things that really captured my attention when I read the book. Is it's not how much you make, it's how much you keep. And then when he mentioned that some people actually work from January to May just to pay the government taxes, and that was so profound, right? Because you just think you don't think of it that way, but that's a lot of taxes, right?
Absolutely. Well, it's because they take out the money before you ever see it. So most people don't know what they've lost because they didn't ever get to see it.
That is such a good point.
So you got to start going back and say, well, where's my money? Who's got my money? Like Grant
Cardone, who's got my money?
The government has got your money, my friend. The government got your money. They got it. You go get it back. And it's so magical because you can get your CPA to review it over several years and get all that money back. It doesn't happen anywhere else. I'm telling you, it's the magic of the United States. We should feel very fortunate to be in this country.
Wow, this is so powerful. Last question. If, there's somebody kind of just listening to me and think, wow, Charles is a doctor, he's got properties out of state, he's got things going on in Jacksonville as well. He's got his family, his wife. Does he ever have fun? What do you do for fun?
Oh man, that's actually the first thing. See, here's the thing. I'm a travel geek, okay? I'm addicted to traveling. And that's what I do for fun. I used to say that was chess, but that's just leisure, something I do when I'm traveling. But it's not much fun for those who don't love the game. But everybody likes traveling. Even if they don't travel themselves, they still go on Facebook or Instagram and go look at people's photos that they take on nice vacations, right? It's my absolute favorite activity to do. I like seeing new countries, meeting new people. This year alone, I've been to, Panama, Costa Rica, Colombia, name it. I went to Israel, Bethlehem, Jerusalem just recently. It's just totally life-changing. When you go on those kind of experiences, you understand why we're in the business that we're in. Real estate allows you to do stuff like that. And guess what? If you know how to arrange your business as well, if you read Tax-Free Wealth, all of that vacation could be paid 2/3 of the way by the federal government. You just need to educate yourself. Legally, you're not even doing any cheating. You're just doing what the government wants you to do.
Yep, totally agree. So if I'm a fly on the wall, or a door listener listening on our conversation, and they're like, oh my goodness, I like what Charles is talking about. I want to connect with Charles. Maybe they're in the Florida market, or maybe they just want to learn or connect with you. Where is the best place you're most active?
Well, so there are two sides that people can get in touch with. I'm a member of Bigger Pockets, which I know you are as well. So I have a profile there. I try to write some blog once in a while, not very often. That's because I spend more time on my own personal website, which I set up for independent contractor physicians who want to do what I do, because that's how I am able to to save out time to spend on my real estate business is I work only as an independent contractor, or what they call locum tenants. So there's a website that we started about a year ago called locumsplanet.com. So LOCUMS planet.com. So they can reach me there. They can, read some of my articles there to see exactly how we're trying to make this happen, or they can just link up with me at biggerpockets.com.
Thank you so much, Charles. I really appreciate it. I've learned so much. Definitely going to be getting you back on the show just to see kind of where you're at in your journey. Thank you so much. I appreciate it.
I'm very, very glad to have been able to link up with you tonight, Ola. You're doing great things. I think your listeners will get a ton of value for all of the content that you provide. So thank you.
Thank you, sir. That means a lot. I really appreciate it.
You're welcome.